an informed financial perspective to the Cayman community.
A very good morning and warm welcome once again to Money Sense. I'm Simon Cawdery, and I'm joined this morning in the studio by my co-hosts Emil Kalinowski and Dr. Amy Hubble. Good morning.
Hello.
My co-hosts today are my co-guests. So let me just reintroduce them for everybody. Emil is a chartered financial analyst and works in the industrial and precious metals industry, following macroeconomic trends. Dr. Amy is also a chartered financial analyst and is an investment advisor who focuses specifically on long-term investment planning for individuals and families. Today's show is the first show of 2019, so a very happy new year to all our listeners. And although we are a radio show, to our viewers today too, as we are now live streaming through magical social media platforms. The first thing I want to say is a very happy new year, therefore, to everyone. It is 2019 in the Western world's calendar, although still the year of the dog for our Chinese friends. That doesn't change until the 4th of February, of course. For those with a more scientific bent, we are in year 4.54 billion of Earth's existence and year 13.799 billion of the universe's existence. Approximately, of course.
Approximately.
I think it's plus or minus 500 million years or something like that. Now, with that out of the way, let us also confuse matters further by welcoming our viewers, as I said, to our radio show. And yes, viewers on a radio show, we are now live streaming on YouTube and I believe soon to be on the Cayman Island Government TV station. So that will... Exciting times, and some of us have clearly...
You guys have faces for radio.
Yeah, some of us clearly taken this more seriously than others and dressed up and combed their hair. I, on the other hand, clearly did not. Let's now crack on with the show. Today's show is our chance to make complete and utter fools of ourselves. This is where we, the hosts, give you our thoughts on what we think may happen in 2019. We offer no promise that we will get anything right, and because we don't like to be sued, please do remember that what we say here are just our opinions, and you really need to ensure that you do your own research before making any investment decisions. There's a slight risk that we may be wrong, you see. With that, and without any further ado, Emil, I believe you're going to kick off proceedings with your views or thoughts on what 2019 may bring us.
Well, I wish you wouldn't mention 2019. You started with the cosmos and the galactic, and I thought on that time scale that our predictions would be guaranteed stone-cold locks, since we have about 5 billion more years to go. So
you've started dark already, suggesting we only have 5 billion years to live.
It means you don't have to be wrong. You can just say that you were early.
Thank you very much, Amy. That's exactly right. Well, let me just start out with 2008. Let's go back in time. And basically my prediction is that 2019 will see another contraction that is part of the economic depression that the world fell into in 2008 and has never recovered from. And the one that we're most familiar with was 2007, 2008, which took place in the North Atlantic, affecting New York City and London banks. But then that same disease that started off that crisis appeared again in Europe, 2011, 2012, and it came under the guise of the Mediterranean crisis, with Portugal, Italy, Greece, and Spain perhaps not being able to fulfill their debt obligations, and perhaps the euro currency itself was at risk.
Yeah, so by disease, you mean countries, individuals, corporations not being able to afford to pay their debt, right?
I would say that was the symptom, and the disease is that there's not enough money being created in the world. And that's what happened in 2007 and 8, and thanks for making me hone in on the point, Amy. I really appreciate that.
By lending.
Yes, credit-based. We're in a credit-based monetary order. That is, that money is provided by commercial banks. And since 2007, 2008, those commercial banks have seen a world filled with risk, not reward, and they have in stages pulled back lending. And so the last episode that we were just discussing was in Europe, but the one most recent was in 2014, 15, and 16, which affected emerging markets, most notably Brazil, Russia, and China, where they went through a crisis that was just as bad, if not worse, than the 2008 crisis for them. It just didn't take place here in North America, let's say, or in Europe, so we didn't quite register it.
But who... So there may be people who are listening today and saying, okay, I understand what happened in those crises. There were bank runs or quasi-bank runs. There were many issues with credit and bank capitalization. But at the end of it, didn't really matter a jot, because central banks did what they did and pumped as much money as they needed to into the system. So yes, the private sector maybe wasn't as expansionary as would have been useful in order to create economic growth. But again, it didn't matter in the slightest because central banks printed whatever they needed to. How would you respond to that argument?
I would say that central banks are not central to money. And their role is they create one kind of money. If they create nickels and dimes of modern money, while commercial banks create 50s and 100s. So yes, they were printing lots of money, but low velocity money that really didn't get the economy going. Their role is not to print money and make it available. Their role is to prime the pump and hope that the commercial banks and the global economic system takes off from there. But it hasn't. If you look at a number of different economic accounts from around the world, what we see is a below-trend growth. Not necessarily negative numbers, but well below trend growth that we had seen since the end of World War II up until 2007. We saw economic growth at certain rates, and since then it's been reflation, contraction, reflation, contraction. And each reflation is less optimistic, less hopeful, less powerful than the one before it. And the most recent one that we just ended was known as globally synchronized growth, where all the world's economies were growing in unison. That was supposed to bring us forward and kick off a new economic boom. But that's over. That ended sometime last year. And we can, because this is going to be the fourth downturn of this particular crisis, we have several metrics that we can follow that show us that commercial banks are not producing that high they're not expanding their balance sheets. As the balance sheets expand, that is a form of global money. And what we see is that international banks have kept their balance sheets flat or shrinking. And that then leads to slowing economic activity. And most importantly, to your point, that this is the most important key point that you said, central banks flooded the system and made the economy not contract. Yes, perhaps they didn't contract fully, but the consequences are no longer economic, they're now political. And that's what we saw in 2014, 15, and 16. We saw the crisis transmit from the economic and financial to the political, where people started turning to leaders who were outsiders, populists, radicals outside the system, because what has been in place for the last 6, 7, 8 years has not been working. So
what are the implications then? You know, one could argue with various elements of that in the sense that your point is that we've seen below trend growth and various elements, but there are so many people with jobs, unemployment levels across most developed markets, the UK, Germany, US, Canada, are exceptionally low. There's questions of measurement, but they are low. Employment rate grows strongly. So people may say, okay, this seems like a very technical argument, but actually the person on the street is still doing fine. They still have a job, but they're still earning money. But what does this actually mean? Let's take your argument and say, yes, we are where we are, and you're right. What are the implications?
Well, the implications are now political and social. They will turn to people who will promise them to take down the world order as it exists and the economic order as it exists and refashion a new one. And so those are the implications, that we're going to be entering a period of volatility. In the 1930s, the Great Depression, it wasn't down every single quarter. Economic activity didn't shrink quarter after quarter after quarter. There were quarters and years where economic activity actually increased and people had jobs. But no one would disagree that we were in a depression at that time. And that's what we're going through right now. Just to make two examples, Italy's economy is, I believe, 8% smaller today than it was in 2007, 2008. The American economy is about to report its fourth quarter results on January 30th. Expectations are for 2-3% growth. If that comes true, that will mean that the American economy has grown less than since 2007, since the crisis began, than it did during the Great Depression when the Great Depression began. That's the takeaway.
But it doesn't feel that way, at least to me, here in the U.S., anywhere else. And maybe, obviously, I'm not in Italy. Maybe it does feel that way there. But I get the feeling that they are kind of like the U.S. consumer. And in many ways, I think the global economy kind of depends on those 340 million people doing what they do best, which is go out and spend money, right? And so we've got, for almost a decade, very, very low interest rates, which means very cheap access to money. We've got cheap gas for the last 5 years. And so all of these things are kind of very, in my mind, even if we're not growing at the same pace, we're still acting like it. Would you agree with that?
Well, we have to make a distinction between contraction, where everyone agrees there's something desperately wrong, where economic activity is shrinking, and positive numbers that are not good enough. And that's the nuance that I'm trying to drive at. In the Great Depression, the American economy did grow, but it was still in a Great Depression and people were very upset. That's where we are today. It's positive numbers, but it's well below social expectations, and that's why they're turning to people outside of the traditional political parties, not just in the United States, but all throughout Europe and more so throughout the world.
I think that's the conclusion I get from what I'm hearing you say, is that it's not about economic growth being negative. It's not about people not feeling people actually being slightly better off, but it's about that level of economic growth missing the expectations that humanity has for it, and that is engendering disquiet and anger.
And yes, absolutely. And the point being also that during that general sense, then there are also periods of downturn, such as we saw in the United States, Europe, the emerging markets, and based on the economic data that I follow that has predicted those previous 3 downturns, we are now entering into another downturn, another contraction. And that, I don't know what will happen, but I expect there will be political and social repercussions beyond just the economic ones.
How much badder, how much worse can the political and social repercussions get, given that a lot of people would say, well, we've already had some of the crazies elected in some of these countries?
Well, I assume that it's a very strong possibility that in a few years we'll look back and wish for the moderation of President Trump.
And
if it
others.
keeps getting worse. If it keeps getting worse, people will continue to look for charismatic leaders who promise them a resolution.
We're talking. You're alluding to 1930s Western Europe or scenarios almost, aren't you?
That doesn't have to be well, this is just what happens both in the developed world and in the emerging economies. When the economy doesn't work for a sustained period of time, people turn to leaders who promise them a return.
Okay, look, I think we will take a brief break here. You've got everybody anxious at 7:40 in the morning. I believe Amy sent me a message saying that one of her topics was going to lighten the mood. And so, and even if things do go terrible, this may be a solution to people to actually relieve some of their stresses. So we're going to take a couple of minutes, a brief break, and join us again as we discuss our views on 2019.
One TradeX knows there's more than one way to invest. One TradeX is the Cayman Islands' only fully licensed online broker-dealer, offering discount trading services to individual investors and traders, hedge fund managers, and family offices. One TradeX has the most competitive online trading prices of any offshore broker worldwide, with no custody or management fees, free demonstration accounts, and no charge to open an account with a $5,000 minimum deposit. Trade stocks, options, futures, bonds, and Forex. Learn more and open your free demo account today at OneTradeX.com. OneTradeX, the Cayman Islands' #1 choice for online brokerage. OneTradeX is licensed to conduct securities investment business by the Cayman Islands Monetary Authority.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands and sponsored by OneTradeX.
And now, more Money Sense.
Welcome back to Money Sense, our first show of 2019. And for those still with us after the opening section of the show, when we were warned of impending doom, gloom, and other somewhat less optimistic scenarios, we are going to see what Amy now has to say about perhaps how to deal with some of those stresses or other views on what might happen in 2019. So, Amy, without further ado, I will pass over to you.
Absolutely. And I do just want to preface it, say that I absolutely do not know what's going to happen. Neither does anyone in this room or anyone outside of this room. Will say that I'm a little more positive than Emil on this year. But again, I also don't like to even take kind of arbitrary periods of 365 days in isolation either. And I definitely, we were saying this at the break, I think it's important that we always are keeping an eye to history because that old adage that it's different this time is rarely true. And so any risk that we are seeing and anything else can go a long way. But to Simon's allusion, I had wrote down that I thought the three biggest things that I'd like to talk about today was oil, interest rates, and, of course, marijuana. And the
understated.
The impact that, and maybe the news coverage that, obviously the legalization of marijuana or cannabis, to use a more technical term, has seen in the investment market, because people are just kind of arbitrarily and aggressively throwing money at anything that basically has the word cannabis in the title. And in 2018, we did see sweeping legalization initiatives in the U.S. There are now 10 states, plus Washington, D.C., that have fully legalized cannabis for both recreational and medicinal use. I think there are 31 states that have at least legalized it in some way from medicinal. Most importantly, of course, is the whole nation of Canada coming online in October. And probably even more important is the state of California, which by itself has a GDP of $3 trillion. I think it's the 5th or 6th largest economy in the world, actually also legalizing cannabis on both a medicinal and recreational basis. So lots of people are excited about this, and this new industry. This is something that I've not seen before, and we're throwing money at it. So and I think the bubble has burst a little bit, as far as from when you were looking at it in October, which was kind of the peak high here. It's dropped about 30%. So I do think that there's a little less enthusiasm for indiscriminately throwing money at companies, because that's really the issue, is that even for us as investment professionals, we don't know which of those companies is any good, because just capital's just flowing in. We don't know anything about the management. We don't know anything about their ability to grow, cultivate, sell, or anything else. So I do think that there's a lot of risk in investing in these. Not to say that there is not necessarily a market there, or that there is not opportunity, but I don't think that the majority of these companies persist for the long term. What do you guys think?
If I wanted to invest in marijuana stocks, and going back to history, would it be a good idea to research the cigarette industry's history, tobacco, and then try to find that same pattern in developing in marijuana, or are these separate industries? I'm trying to find what's the biggest
analog.
What's the biggest tobacco
you
producer?
Would probably Philip Morris,
yes.
Altria.
So am I looking for a Philip Morris and how they came to be in the marijuana industry, or no, I'm looking for something else.
I do think, obviously, that there's a lot of parallels. Obviously, you still have to grow it. You still have to, in some way, process it. And then you have to have the distribution network. And I think that, as far as these companies that are going to be successful, is crucial to the success. And I think that even the tobacco companies, because marijuana could be considered a replacement good for cigarettes, and if people start smoking marijuana and stop smoking tobacco, there could be some give and take, supply and demand changes there. And so that you have to adapt to kind of that market. And I do think that cigarette companies, alcohol companies, anything that has a wide distribution network within the U.S., I think that they're all starting to look at marijuana companies to diversify and at least get into that industry. Mm-hmm. So there may be, I think, some opportunities if you do own kind of an obscure Canadian cannabis company that maybe one of those big U.S. distributors come in and overpay basically for that because they are desperate to get into the market. And right now, because it is not federally legal, U.S.-based cannabis companies cannot list on U.S.-based exchanges, which means they have no access to capital. So that's why you see these Canadian companies. Basically, I think the top 5 have a market cap of about $40 billion, which is probably half of the global market cap of cannabis companies in the world for demand that we're not even really sure exists. So for 2018, the demand for legal cannabis was $25 billion. The projections for a fully legalized environment, somewhere between 50 and 150 billion. But these Canadian companies cannot sell in the U.S., so they have all the capital raising ability, and they're now obviously investing in hydroponic growing and everything else in Canada. But I do think that eventually those will be taken over by U.S. cannabis companies or large U.S. companies that already have distribution networks that will then buy it in. We've seen Constellation Brands, which is the owner of Corona, purchasing Canopy Growth. We've seen Heineken trying to get into the market. They're making some sort of hybrid pot beer here and there. So everyone is trying to get in on this craze, but I do think there's a lot of craze as part of it.
Be careful is what I'm hearing you say.
Absolutely be careful. But my bottom line forecast is that I do think in 2019 that marijuana is declassified as a Schedule I drug. And that's just my belief that this will happen this year. I don't think it will be legalized recreationally federally, but I do think that we could see a declassification basically from a Schedule I drug, which is saying that there's no medicinal use, there is no access to capital there, to being a Schedule II drug, that then U.S. cannabis companies could then get access to the U.S. markets. And I think that's can change the game, at least for the short term.
Well, I'm going to take a wide berth on this one and not make particular comments about the cannabis industry, other than to make a point of order, which is I struggle to find how anyone can aggressively throw money at cannabis companies if on cannabis, but that's just a poor joke that we'll gloss over.
Well, there are no earnings. I mean, that's the issue, and actual net earnings are probably a decade away when you talk about the actual ability for growers to start making margin. There's very, very little margin, especially in states like California, where the taxes and the duty that are kind of charged on legal cannabis can be up to 45%. So when you're trying to even compete against the more illicit, illegal channels that you don't have to pay the 45%, margins are hard to find here because if you're just selling leaf, I think the companies that are going to be selling pharmaceuticals or kind of the more secondary consumables like vapes or edibles will do better just because there will be a little bit more margin expansion.
There you go. Oil, I think, was another topic that you wanted to say.
Oil, my favorite.
We'll give you 60 seconds on oil. How people's gasoline prices going to fare?
Well, yeah. So that's the point. Oil's definitely been just aggressively beat up in the last 3 months, and I'm sure you've seen it in your business too, as far as the commodity
side. It's one of the indicators. The steep downfall is extremely unrare. It's very rare. This 40% decline in less than 80 days happens extremely rarely.
Yeah, absolutely. And we did see kind of that run up happen in the first of the year, but then to basically go from $76 oil to $46 oil so quickly has a major shock. But the real issue on oil, I think, is not necessarily an investment standpoint, but it is the impact on the American consumer. And again, I am very tuned into the American consumer because any changes in the American consumer's ability to spend is going to have very far-reaching implications. So in my hometown right now, I looked it up last night, gas is $1.68 a gallon. So that's $1.38 Cayman. I mean, that is
different size gallons.
Well,
just to confuse matters, of course.
Of course, I don't know, but it is incredibly cheap. I mean, even historically cheap, but it has been historically cheap for the last 5 years. And just like low interest rates, the American consumer has become addicted to this, excuse the pun of using drugs, but addicted to this low gas price, which means that they've gotten accustomed to that low payment there, which means they can spend their money elsewhere. So any shock to the oil market or our ability to access cheap gas basically crumbles the entire global economy because it reduces the ability of the American consumer, which drives the bus, ability to spend. So I do think that oil has been somehow exempt from Trump's America's First policy, which I think is very interesting, just because I do believe if we had help with our friends in Canada, that we could actually be energy independent if we wanted to be. It would take some time to build up infrastructure and refineries, and I don't know that we want to do that necessarily, or that it makes sense to do that, but I do think that it has, and not to be political, but I do think that it is continuing to wreak havoc in that part of the world based on the need of the American consumer to continue to get that oil cheaply.
What would be the prediction with oil?
Well, OPEC continues to crumble. I don't think that we see a full operating committee in OPEC at the end of 2019, but it also means that, we saw Qatar move out of OPEC. I think that continues. And as these companies not companies, but countries back out of OPEC, then they're just going in and they're going to continue to pull out oil at whatever rate that they want, which is going to be much higher than I think the OPEC, which they maybe have been doing all along. But so the supply glut will not decimate. So for now, I do think that oil prices stay low.
There you go. We are getting very close to the end of the show. As is always the case, we run out of time before we have time to finish. I'm going to say 1 minute of something, and this is good because it gives neither of you the chance to come back and critique me. But a year ago, I made the rather wild and exotic allegation that Bitcoin would, and deservedly should, go to zero during the course of 2018. I then said that cryptocurrencies currently had no relative benefit other than to those who are terrorists, drug dealers or criminals. Today I'd like to apologise for that statement because I actually ignored another group of people for whom Bitcoin would be useful, which are those who are living in despotic regimes where state confiscation of property is rife. I still, however, stand by my proposition that Bitcoin has no earthly use. I can't find anything that can be done more efficiently with Bitcoin or other cryptocurrencies that could not be done with humble cash or credit cards. When that changes, I shall be open to changing my opinion on it. And bear in mind, back in January 2018, when we did our presentation here in the studio, Bitcoin was at the lofty levels of 14,700, and today has fallen below 4,000.
Nowhere near zero.
Nowhere near zero yet, but it's closer to zero than it was. Now, I understand that those who bought back 2 decades ago at 1 cent are making a lot of money, but for those doctors, dentists, and other people who were excitable about getting into Bitcoin in 2018, please say that you didn't and don't this year. There is further misery ahead for people who invest in cryptocurrencies. There is a difference between cryptocurrencies and crypto technology. Crypto technology can be useful. I haven't yet seen a profitable application of it, but that doesn't mean there can't be one. But cryptocurrencies are something that is dangerous to be speculating on. It's a pure speculation and it shouldn't involve your money. That's my brief
I don't know what this means, but I think I agree with you.
That's even more scary.
Dangerous.
That is even more scary. Now, on that, we are unfortunately at the end of our time on Money Sense. As always, as I say, time is too limited. We have other shows that are coming up here on Radio Cayman. My fellow hosts, thank you both for your time, your sporting willingness to put your careers, reputations on the line for us today. Your divination skills will be tested over the coming 12 months, and whether right or wrong, you've certainly given our listeners pause for thought. And so thank you both.
Thank you.
Thank you.
As a final note before we leave, just want to again thank all of our listeners and viewers today. Remind you that today's show will be available as a podcast on the CFA Society Cayman Islands webpage. I encourage you, if you have a question or topic, please tweet us at Money Sense Radio or email us at moneysense@candw.ky. With that, thank you once again. Please do tune in again in 2 weeks' time.
Money Sense is brought to you with the support of One Trade X. One Trade X, the Cayman Islands' #1 choice for online brokerage.